Joining us now, Kevin Warsh, dear friend, former Federal Reserve Governor, fellow at the Hoover Institution. Kevin, welcome back. I know the market is correcting, but people don't have any patience anymore. And I'll ask you if you see a recession. I've talked about this all week. I don't see a recession, but what do you think?
So the president inherited a fiscal and monetary mess. I think a little patience is in order. Rome wasn't built in a day. I think he's been president 52 days. The economy came into this period with a lot of government money that shouldn't be there, which has negative multipliers. Had bad regulatory policy, bad monetary policy going into this period, bad fiscal policy. Reversal is going to take a little bit of time, and I think the benefit of the doubt should go to a new leader at a time like this.
If he goes through this kind of fiscal and budget consolidation that we're talking about with Elon Musk and so forth, if he brings the spending share of GDP down, isn't that ultimately very positive and healthy for the economy?
It's great news for the economy. It's also great news for corporate earnings. The government is too big, it spends too much, and the money it spends is wasteful. That's what Elon and the gang have taught us. So, of course, it's going to take a little time for the government to spend less and a little more time for the private sector to spend more. But this is the transition the economy needs, so the medium-term growth prospects are stronger. This is really good news. In economics, we call it an expansionary fiscal contraction. There's not a ton of them in economic history, but the president's well positioned to have one of them now, and I think we're on the right track to do it. So good news, I think, is coming.
And he's talking about major league tax cuts. I mean, he's talking about 100% expensing for machinery and equipment and factories, and the 15% made in America tax. In other words, he's saying, come to America. You won't have to worry about tariffs. We're going to give you very, very low tax rates and deregulation.
Yeah, so I think the two biggest points that matter to the economy and ultimately will matter to the stock market is, one, business capital expenditures. Is this an economy where businesses say, with full expensing especially, I'm going to be investing in the United States? The multiplier on that money is a lot better than the multiplier on USAID funding, and that's important. The fourth quarter of this year showed negative CapEx outside of structures, negative business fixed investment. That's got to turn. The second point's more important than the first. I think we're at the beginning, now 50 days into it, of the president starting to roll up his sleeves on a deregulatory agenda. We're going to see it soon, I hope, in bank regulation. This will be a huge stimulus to the economy. And the president, with some proper new choices at the bank regulators, needs to send the signal that America's bank regulators are open for business.
Mickey Bowman going to be the vice chair for supervision. She's a fierce deregulator.
Yeah, so I hope the reports of her choice are true. I know her. She's a friend, Larry. She's got two things going for her. One is courage, and the other thing is convictions. And she's there. She can hit the ground running. There is no time to waste because our bank regulatory policies have been on the wrong track. Small and medium-sized banks have no idea whether a merger would be cleared by the regulators. Large banks are spending hundreds of billions each on a bunch of compliance tests that make them neither safer nor sounder. That's credit and capital that can go to the real economy. If Mickey gets chosen, as I hope she does, she'll be a great choice. And along with the other bank regulators, led by Scott Bessent, I think we can see a brand new deregulatory set of programs. And once markets can start to focus on that, I think they'll see better news.
I mean, it'd be nice to get a new batch of bank loans, all right? Old-fashioned loans. Let's help businesses by making loans instead of DEI and ESG and other things that we don't need to talk about. Kevin Warsh, thank you very much. We appreciate it.
Thanks, Larry. Great to be with you.
You betcha. Good to see you.